90 Iranian targets hit overnight. Oil reversed, and the Nasdaq closed up 1.3%. If that sounds like a market that stopped caring about geopolitics, you're exactly right. Today is Thursday, July 9th. This is the Red Blue Report. Let's get to work. Yesterday, the Dow lost 1.1%. The Nasdaq was clinging to that MTST confluence around 25,850, and semis were trying to bounce off a 4.7% drubbing. Today, a different tape. The Dow added just 0.2%. The S&P gained 0.8%, but the Nasdaq up 336 points to 26,206, a 1.3% gain. SOX led the way, with Micron up 4.5%, ahead of one of the most anticipated chip IPOs in years. If you're new here, do me a favor, hit subscribe. The free market note is linked in the description. No paywall, no spam, just the note. Let's run the scoreboard first. Yesterday, I said NVIDIA's $197 LT line was the tell. Hold it, and the bounce stays alive. Today, NVIDIA dipped to $198, $197 intraday, nearly tagged that $197 level, and bounced. But I've got to be straight with you. It couldn't reclaim $204. Closed down the 0.66% at $202.78, underperforming the Nasdaq by nearly 2 points. The tell held, but barely. And on OXY, I told you yesterday, don't chase that $55 MT resistance. Wait for the 50-51 zone to add. Today, OXY closed at 52.30, down 2.4%, as oil erased Wednesday's entire gain. That's 2 for 2 on the warning shots. Pull up the Nasdaq daily. That Wednesday indecision candle resolved to the upside today, closing clear of the ST line and putting 26,200 back on the board. But look at the volume, not a blowout. This rally is narrow, led by chips and AI names, not broad conviction. The hourly chart shows steady buying through the session, no late-day fade, but no euphoric spike either. NVIDIA Daily is the chart that tells you where this market really is. Long upper wick, close near the low of the day. 130 honors shares traded. It tested 204 and failed. The hourly shows that intraday flush down to $190 and the bounce, but the bounce couldn't get back above the opening print. That's distribution, not accumulation, at least for today. The catalyst everyone's actually watching isn't Iran or the Fed. It's SK Hynix. The Korean memory giant is set to debut on the Nasdaq tomorrow at $140 per share, with demand running 7x oversubscribed. That's the AI trade in a single picture. Micron, SanDisk, Marvell all jumped 4 to 5% today on that coattail effect. BABA followed through, sort of. Up another 2% to 111, but volume got cut from 39 MENT to 13M shares. That's not momentum, that's digestion. Still below the MT at $120 and the LT at $130. Don't mistake a relief bounce for a trend reversal. OXY is the chart that pays attention. Daily shows a clean rejection from $53.59, couldn't even test that $55 MT, and closed right on the day's low at $52.30. The hourly is a straight line down after the opening print. Oil fell today because the market looked at 90 targets hit and said, "We've seen this movie before." When the market stops reacting to bad news, you take note. But when oil stocks can't catch a bid even with a war premium, you respect that too. Jobless claims came in essentially flat this morning. No surprise there, labor still holding. But PepsiCo's earnings told a different story on the consumer, down 3.3% on the day, with management admitting Americans are pulling back on snacks and soda as inflation bites. That's the tension underneath this rally. Tomorrow is Friday. SK Hynix debuts. Bank earnings start rolling in. And it's a weekend where Iran could retaliate further, with the Strait of Hormuz still at a near standstill. Here's the trade board. Cash is still a position. I said that yesterday, and I'm saying it again. If you're long chips into the SK Hynix Open, you're chasing a 7x oversubscribed IPO. Set your stops, don't chase blindly. If you want OXY long, I'm still waiting for $50 before adding. Same call as yesterday. Baba? If you got in near $98, trim some into this strength. Don't start a new position here at $111. And for the bears, PEP's result today is a consumer warning shot, but the tape isn't ready to roll over yet. Risk board. Iran escalation over the weekend. Real. Oil spiking back above Wednesday's high. Real. Chips selling off on the SK Hynix Open. Sell the news is a classic setup. And VIX is still above 16, even on a 1.3% green day for the Nasdaq. That's the options market telling you it's not nearly as comfortable as the index print suggests. Trade safe.